Hello, everyone. Welcome back to our weekly exploration of price action analysis. Today, our focus is on the GBPUSD. Diving deep into the complexities of these market conditions as we step into a crucial first week of the month of November, which is obviously marked by impactful economic events that will undoubtedly shape market sentiment this week. In the past week, amidst a robust U.S. economic data, geopolitical tensions, and market uncertainties, we witnessed the GBPUSD trade within a range. But that didn't stop us from seizing opportunities on both the buying and selling sides. In fact, we managed to secure a fairly 250 to 300 pips, which you can see highlighted in the commentaries scrolling on your screen. If you missed out on my analysis and commentary from last week and would like to catch up for educational purposes, you can find the link in the description box below or conveniently located at the top right hand corner of your screen if you are watching on my YouTube channel. Well, currently the market is grappling with uncertainties due to the escalating tensions in the Middle East, which inevitably affects market sentiment. So how do we intend to position ourselves technically for the upcoming week? Well, as we gear up for the new week, together we will examine the current market structure from a technical standpoint, taking into account the fundamental factors that hold sway over this market. Armed with fundamental tools such as trend lines, key levels, and chart patterns, we aim to uncover potential path of price action in the coming days. I want to emphasize that this video is intended solely for educational purposes and is not financial advice. My goal is to empower you with insight into the GBPUSD and enhance your proficiency in price action analysis. Remember, Forex trading inherently involves risk, so always proceed with caution and consider consulting a professional financial advisor before making any investment decisions. Without further ado, let's delve into the details. So our center of focus for this week will start from the daily time frame, where we are going to be having an holistic perspective into what really has been going on in this market for the past 1 year. Though price action has been a little bit bullish if we take this time space into consideration, but where my center of focus is going to be for this week is around this key level I was able to identify here at the 1.20500 zone. Now, if you look at this structure closely since last year May, you will see how this key level had played a major role in determining the direction of price action. In fact, if we look at the month of May last year, we saw how this area was initially a demand zone. Look at what has happened here, a little bit of consolidation phase before price broke down the structure during the month of August last year. And not until the month of November last year, we saw price climb above that structure, and it remained above that level for a while till we had some little breakdown, price climbing back up again in the month of March of this year. And since that moment, price action had continued to remain above this level, as you will see here that since the beginning of this month, to be precise, despite the strong bearish momentum, we have seen how sellers have found it difficult to break through that area. Now, with this information we have gathered here, you would agree with me that we are at a crucial juncture in the market right now, as depending on what happens this week will determine if we are going to be going bullish, that is, if price remains above that key level, or we're going to be going bearish if price breaks down and retests that structure. Now, to help us position ourselves technically ahead of the new week, I was able to identify a simple setup on the 4 hours time frame which we will be using to guide our decisions for the upcoming week. However, before we dive into that details, it's very important that we take note of the fundamental factors that will be driving the market sentiment for this week. And as you all know that these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. So for this week, we are going to be focusing on high impact event coming in from both the United States and the United Kingdom economic docket, considering the assets we are looking at. Now, the first high impact event is coming in on Wednesday, November 1st, and is from the United States economic docket. And this includes data coming in from the labor sector, like the ADP employment change. Then on that same day, we have the ISM manufacturing PMI, and later that day, we have the Fed interest rate decision coming up, which is one event everyone is looking forward to, as there is this general understanding that there is likely going to be an unchanged interest rate. Then we also have the Fed monetary policy statement and the FOMC press conference, where the Fed chairman will be welcoming questions from the press. Then on Thursday, November 2nd, is the day for the United Kingdom, where we shall be witnessing the monetary policy reports, asset purchase facilities, the interest rate decision for the United Kingdom, which is of course expected to remain unchanged. We also have the MPC vote rate cuts, rate hike, rate unchanged, monetary policy reports, and finally, the Bank of England's governor will be having a speech. Then on Friday, we have data coming in from the labor sector of the United States, like the average hourly earnings and the almighty non-farm payroll. Then to end the week, we have the ISM services PMI, all from the United States economic docket. So these are the impactful events we are going to be looking forward to for this week. And as technical traders, what we are going to be doing is to anticipate this event by looking at what the chart is saying. And of course, we do know that the anticipation of this event alone also has a tendency of influencing the market sentiment, which obviously will reflect on the chart as price action. Now, talking about price action, let's dive right into the 4 hours time frame, where I was able to identify a simple setup. So if I zoom out here, what I did here was to take into consideration the nature of price action since the month of July. And in fact, it's quite clear that price action has been bearish. In fact, we have a couple of descending trend lines here after connecting the series of lower highs to give us an insight into how strong the sellers are in this particular market. Now, besides the trend line here, there is something interesting that began to surface in this market since this month of October started. Now, if we zoom into the beginning of this month of October, you will see that despite the strong bearish momentum, we have seen how the sellers have found it difficult to break through that key level that we identified on the daily time frame, which interestingly I will be calling a demand zone because of the inability of sellers to break through the structure. And this may likely be a platform that could incite another wave of bullish momentum, maybe back into those descending trend line we spotted earlier, probably to incite a downtrend continuation, or we might likely see scenarios where those trend lines will be broken out of to incite new waves of bullish momentum. So with the case scenario we have here, coupled with the fact that price remains both above our key level and that demand zone at the 1.20500 area, I want to be considering buying opportunities here. Now, in as much as I'm looking out for buying opportunities, we cannot ignore the potentials that sellers too can still come in. And for me to start considering selling the GBPUSD this week, I would rather want to see price action slice and take out all the buy positions within this demand zone, retest of structure to confirm to me that it's comfortable for us to sell the GBPUSD at that point. So you will see that our center of focus is basically around that key level where, depending on how participants in the market reacts to the structure at the beginning of the week, will determine where our direction will be. So I'll be pausing the video here, but trust me, I will be with you in the comment section of both on all my public platforms to give you updates on what we are going to be doing during the first half of the week, and this will be subject to how participants in the market react above this demand zone. I do hope this video has been of immense help in making your independent trading decisions ahead of the new week. And if it truly did, I would really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this material beneficial to them too. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.